Welcome to another segment of Earnings Review, and today we're by the sidelines of another annual general meeting for Bindura Nickel Corporation, where we're going to have a conversation with the board chairman and members of the executive. Stay tuned. In yesteryears, there has been indications that if you reach $16,000 per ton of nickel, the smelter will become a viable consideration. But now we know that the price of nickel has been hovering at about 20,000 per ton. So the question then that comes is, what is the status regarding the development of the smelter, since we know it was left at 83%?
Regrettably, we are no longer in that situation where we were, where we thought we had done 83% of the work that needed to be done to get the smelter back on track. We are now in a situation where, because of the delay that has occurred, in spite of the favorable nickel prices now, we've gone down to about 62%. We now need another $25.5 million US to get us back to where we should be. And that's the first point. And then the second point, we realized that we need to get experts to come in and take stock of the work that was done vis-a-vis the smelter, and also to determine what remains to be done and the cost. So we've enlisted the services of a South African company called Hatch of South Africa to do that technical audit. And that's going to cost us just under 200,000 United States dollars. And they are at a fairly advanced stage of completing that the assessment, and then once we pay the 200,000 US dollars, they will come in and get that done. But over and above that, we also need to get a technical audit done with regard to the resuscitation of the refinery. And so we're going to do exactly the same sort of exercise and list the services of the experts, to come in and give us an indication of what it is that needs to be done to get the refinery back to where it used to be in 2008 or pre-2008, when both the smelter and the refinery were placed under care and maintenance. But the last point I want to mention with regard to the resuscitation of both the smelter and refinery is that we also need to make sure that by the time we spend the kind of money that needs to be spent to get BNC back to being a vertically integrated operation, doing the mining, the smelting and refining, we need to make sure that there will be enough feedstock from our mining operations, bearing in mind that in the past we used to have 4 producing mines: Trojan Mine, Madziwa Mine, Shangani Mine and Epoch. Epoch is gone. Shangani is still there but flooded. Would need to dewater it if we're thinking of getting it back into production. Madziwa Mine is history. So we've been solely dependent on Trojan Mine. But given where the nickel prices are, we are seriously looking into getting Hunter's Road, in production, and that can be done inside 2 years. So once we are assured of getting enough feedstock to go into the smelter and refinery, that will give us more than enough incentive to spend the kind of money that needs to be spent to complete the smelter first, and look at completing the resuscitation of the refinery.
Well noted, well noted. Again, Elon Musk was quoted to have said at some point, nickel is becoming the new gold. But the question that we want to bring forward to you now is, with the increasing demand in electric vehicles, what has the company been looking at to make sure that nickel is added its value? And with regards also even knowing that we have reserves of lithium in the country, what are we doing as a company to make sure that that can also be looked into?
Yeah, the electric vehicles is one of many exciting developments that are happening out there. But for now, most of the production that is coming out of BNC is going into the stainless steel industry, because our traditional customers, are in the Oriental East, and there's a huge appetite for the stainless steel industry in China, and so we will be guided on where to put our nickel, the final product, that is by our marketing gurus, and we've got an arrangement at the moment with one of the international commodity trading companies that has its headquarters in Switzerland. So they're the ones who will guide us, because virtually everything that we produce is sold. So, but we are, definitely following the exciting developments that are happening with regard to the electric motor vehicle side of things.
Interesting. In the 2022 financial year, you lost about 22 hours to power outages. How are you mitigating such operational obstacles currently?
Well, because we as a country have always been endowed with solar energy. I'm pleased to report that our parent company, Wimba Mining House, has embarked on a huge solar energy project, which will supply not just us, but other sister companies like Rebecca and Shamba, coal mines. So the developments are really well underway towards establishing a solar energy farm on Benside Farm, which is an integral part of Trojan nickel mine, and so that's going to be a game changer, because one of the things that we definitely need is an uninterrupted supply of electricity.
Interesting.
So we will have more than enough energy, not only to meet our needs, from an operational perspective, but we will also have access to put into the national grid.
Interesting. Thank you very much, sir. That's all we had for you.
Thank you.
Look forward to hearing more from you in the future times.
Right.
Tons of ore were mined for the quarter. They increased to 13% in comparison to prior year. What steered this movement from your own perspective?
Thank you very much, Ronald, for having me. Now, to your question, what has happened over this financial year, or the last financial year, transitioning into the current financial year, is that there was a deliberate strategy to move away from the high-grade, low-volume strategy that the mine was using over the last decade, because we had the luxury of having a huge resource of massive ore, which is high-grade. But now, with the decline in the volumes of that high-grade resource, we are forced into a situation where we have to compensate that with increased volumes. So what has been happening is very deliberate, the mining of higher volumes, so that we produce more nickel, compensating for the decline in the high-grade resource that we had over the last decade. So it's part of a deliberate strategy.
Interesting. And what has now the sustained strengthening of the prices of nickel, what do they mean for BNC at the current moment?
It's a significant development that has been happening on the international world market. Firstly, for the current Bindra Nickel Corporation operation, it means more sustainability. The business becomes more sustainable. It becomes more profitable. It can generate more cash for reinvestment into the operations, into the business itself. But apart from that, and in addition to that, it also means we'll be able to generate more cash for investment into the other projects that we own. Remember, BNC owns Hunters Road, BNC owns Kingston Hill, and these are massive resources of nickel. And what is required now is for capital to be invested into those, to operationalize those projects, into producing mines. So the firming up of nickel price on the international world markets is a positive development for us, both for the currently operating mine, Trojan Nickel Mine, and for the future of BNC, which is domiciled in the projects that we have.
Wow, interesting, very enlightening. And again, the company had nearly 3.4 million fatality-free shifts, which is very positive from your point of view. But the question is, what measures do you employ to make sure that your employees are safe here at the mine?
Ronald, we owe this to the employees themselves. They've done very well, and I should commend them in my capacity as managing director. So a lot of things have happened in terms of behavioral change. That's why there's been this drastic improvement overall in the safety situation on the mine. It's not just about fatality-free shifts. Among ourselves, as employees in this company, we don't even talk about fatality-free shifts because we take that as a given. So we talk about LTIs and non-lost time injuries. You find that our performance over the last financial year was good in terms of even those minor ones, because employees have changed their behavior. We are inculcating a culture of safety where we are really targeting zero harm, and we are very serious about it. When we say zero harm, we mean zero harm. And the employees also understand that, and they are playing their part to make sure this business really attains that strategic objective of zero harm.
Interesting, interesting. And again, what is the current situation or status with regards to the REDIP project? And also maybe, are you also planning on other projects such as maybe open cast mining?
The REDIP project was the first one. REDIP 1 was completed in April 2021. You remember that phase 1 of the REDIP. But we are now in a situation where we need the second phase of that REDIP, and I know that's what you are talking about. We are actively looking at that and the investment that is required for us to make sure that project materializes, because it is going to have significant benefits for us. We've done exploration all the way down to 59 level, which is approximately 1.8 kilometers vertically below surface. And indications are the nickel ore bodies continue down to 1.8 kilometers below surface and below. So the redeepening of the shafts then becomes absolutely essential and unavoidable in terms of accessing the resource that lies deeper down. And this is why we're chasing this project, to make sure within the next 3 years we come to a stage where we commission REDIP 2.
Interesting, interesting. And maybe just as a follow-up, and lastly, what will then this commissioning of these projects then mean for the tonnage that will be produced by BNC?
It will mean increased tonnage from underground mining, but also it will mean reduced operational costs, because we then avoid hauling ore up a ramp using a dump truck. We'll then be able to hoist. This is why it is absolutely imperative that this project is done and consummated within the next 3 years.
Interesting. Thank you very much, Mr. Luciano. It was a pleasure to sit down and have a conversation with you.
Thank you very much, Ronald.
Thank you. Welcome, Mr. Patrick Shayawabaya. Our first question then to you is, the profit after tax for the year amounted to 8.1 million United States dollars. That is 361% higher than prior year, which was around 1.71 million.
Yeah.
So the question is, how did you manage to achieve that?
Okay, two things really. I think the prior year, one could say we're coming off a low base, but then for the current year, or the year to March 2022, we benefited from much higher LME nickel prices. We averaged a 37% increase over the previous year, which was 15,000 to about 20,600. So that jump in the nickel price, in a way, more than compensated for the fact that the nickel sales for the year were lower than last year, the previous year. We sold 4,700 tons compared to about 5,300 the previous year. So really the big the factor there was the nickel price. In a way, we one could say we did not fully benefit from the fact that the nickel price had jumped as much as it did, because we produced and sold less. So the year could have been better.
Interesting.
Yeah.
Interesting.
Yeah.
Now, the company from the quarter ended June 30,
Yeah.
it suffered a loss. What drove that narrative?
Well, two things really. We produced less and therefore sold less. In terms of where we wanted to be, we should have produced about 1,300 tons of nickel. In the end, we produced just under 1,000, so we're like 30% down on where we needed to be. And then the price also came off a little bit. And then the fact that, I mean, we've been going on and on about this like a broken record, but the issue is we still are burdened with old and dilapidated equipment, which requires a lot in terms of maintenance. But what you get out of that equipment, having incurred high costs to maintain it, you don't get as much as you would in terms of output. So that's really the main factor that affected our costs. Then, of course, the fact that we surrender 40% of our revenue to the Reserve Bank for Zimbabwe dollar costs, for Zimbabwe dollars, which we use to procure services and inputs from the local market. Obviously, the people from whom we procure don't use the same exchange rate, would have got that money. So it's a double whammy for us. We get a sub-economic rate for our foreign currency, and then we use that foreign currency to buy from a market which does not use the same exchange rate. That has been a source of increasing local inflation for us.
Interesting,
Yeah.
interesting.
Yeah.
Lastly, Mr. Patrick, I will quote a statement in your trading update.
Yeah.
The high cost of maintaining the aged underground mining mobile equipment fleet, as well as the increase in local operating costs, coupled with lower nickel in concentrate production, resulted in an increase in unit costs.
Yeah.
Now the question is, how are you mitigating the risks associated
Yeah.
with increasing operational
Yeah.
costs?
Look, as I said, the biggest contributor is the high cost of maintenance. And as we say in the annual report, we have commenced the process of replacing that equipment. We've started getting delivery of that equipment, but it's not all going to happen at one time. We got delivery of some units. We're expecting some units either end of September or early October, and we get the balance of the units in mid-2023. So it will be a while before we get to a stage where the age profile of our equipment is such that the cost of maintaining it is about where it should be. So I can't say we're doing something about it right now, which will have an immediate impact, but certainly by the time we get to the end of the financial year, we will be pretty close to where we should be, as I said, regarding the age profile of the equipment.
Thank you very much, Mr. Patrick Shababaya. It was a pleasure to sit down and converse with you about the company.
Thank you very much.
Thank you.
Okay.
Equity Live presents the complete online interactive presentation solution. Hosting AGMs, media and analyst briefings has never been this simple, efficient and affordable. Communicate globally through a combination of high-definition video and your prepared multimedia presentation from any location of your choice. Interact with your invited participants from all over the world in question and answer sessions and voting sessions in real time on our safe, secure and affordable platform. Contact Equity Live for a free customized demonstration. Equity Live, real-time presentation solutions.
There you have it, a sense of direction from the management team here at BNC. It's a wrap from the Equity Axis team. Don't forget to share, like, and subscribe. Ciao.